Get in early. This stock is about to take off, in my opinion. This isn't financial advice, but my research suggests it's a good idea to buy as much as possible before November 26th. This is a Swiss athletic and leisure wear, a sportswear company. They distribute that sportswear all over the world. Company is ticker symbol ONON, On Holding, and they do release their earnings in Swiss francs. Given that they are listed on the New York Stock Exchange, we want that in US dollars. They have $1 billion in sales, 25% growth in that net sales year over year. And in a stock market where everything moved down the last couple of days, this stock just reported earnings and is holding incredibly well. It seems completely disconnected from the market, which is very good to see money flowing into this where everything's been sucked out of the room in the past week, including Bitcoin going down, gold having a drop as well. So it's not like money rotated into different assets. I mean, a little bit into healthcare and oil, but this company looks strong. Let's jump into a little breakdown on ONON.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little bit about other companies that are similar, basically German companies trading in US markets. So this is a German company. They are located in Zurich, Switzerland. So for that reason, everything is reported in Swiss francs. So it's a little bit under the radar for that reason, I think. I'm not sure as many people are talking about it. This earnings reaction is strong, and it doesn't look crazy strong. You look at some other earnings reactions like GM, that looks really good, or, well, not this quarter, but if you look at Reddit, this second quarter, just very strong. But what's interesting is if we look at the SPY the last few days, well, yesterday went down a lot. And despite that, ONON is holding very well. So you can risk this high volume level around 42, 41 and 3/4. And you've got a pretty good opportunity there. There are some other tickers to sort of use as benchmarks just for sanity checks. Really, these are other German tickers. We don't really want to look at the OTC tickers. So it's kind of in a league of its own, I suppose, when it's really just SAP. And SAP is so big, it's not even really a good analog. Okay, so this doesn't even really compute matter. So for that reason, it's a little bit speculative, you might say, but generally you want to buy stocks in themes where everything's going up. But at this time, if we look at Nike, we look at DEC, we look at Crocs, Nike is doing okay. It's been down a lot. If we look at Crocs, it's not doing well at all. So I don't know how healthy this sort of theme is. DEC, Birkenstock as well. Just not really looking super strong at all, right? Little bit of a curl up in some of these, but only recently. And yeah, On Holding showing that strength. It's not necessarily related to the other ones, but if you're going to buy one of them, Nike didn't have earnings, right? Earnings were back here. Birkenstocks didn't have earnings. Crocs, well, it did have earnings, but went down. So by process of elimination, this is kind of the one that held up on earnings. The earnings were solid. You can see that big earnings per share beat in US dollars, and it's holding up. So it is hard to find stocks to buy right now. XLV is the healthcare ETF here, holding up, but probably difficult to buy at this level. Biotech's doing well as well. XBI and LABU holding up, but biotechs have that risk of, some FDA challenges like QURA or trial results where a patient has a side effect, like this CRISPR stock. So it has to be on holdings. It's unusual to be talking about a German stock, listed on the New York Stock Exchange, but still, that's headquartered in Switzerland. But it just so happens that this is the pattern that's holding up right now. So if you're interested in the earnings themselves, they did increase their revenue growth forecast. So guidance is strong. That's what you always look for: strong earnings, revenue, guidance. So earnings and sales as well as guidance. And they did have a little increase in margins as well, which never hurt. So if sales in North America, South America grew by 20%, that's a nice little boost. So we'll see what happens. This is a famous influencer, Zendaya, like a very famous one. So they're kind of similar to that Abercrombie and Fitch or American Eagle. Well, they got acquired. That's not a good example, but Abercrombie and Fitch definitely utilized some sort of pop culture pump, dare I say the pump word. I only call it that because it ultimately didn't work. Of course, if a stock keeps going up and they raise money off of a campaign, then no one will be saying the PUMP word at all. But unfortunately, Abercrombie and Fitch did sell off here. So not saying that sort of same, prophecy is going to happen here, but just saying, be aware. That's a risk factor. So the level's super strong. The chart looks great. Everything's great until you realize you're buying a German company headquartered in Switzerland. But you know what? Kathy Wood bought Alibaba somewhere in here. Okay, that's a Chinese company, which is probably the riskiest you can get, more risky than a German company. And Baidu has been super strong as well. I mean, not as of the last couple of days, but huge run this year. So I think there is a lot of opportunity in these stocks with real earnings and sales. Not talking about Chinese, stocks that just dilute like this, that go down, down, down. I'm talking about stocks that have big turnaround stories. So that's the level. That's the idea. If you like these ideas, hit that like. If you want a free course, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com. 7-day trial for $25.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.